Countrywide exec story. Population growth changes. Buying bonds helps liquidity.
Next on Real Estate News You Can Use.
Hey! Woo-hoo! Woo-hoo! Yeah! Woo-hoo! Ruben, we did it! Yeah!
Oh.
Welcome to episode 55.
Of Real Estate News You Can Use. What's
Wow.
up, Keith?
A half a century old. Something like that.
Something
Or half
like
a century number.
that. Something like that. Did you ever think we'd make it to 50 episodes?
Not with you.
Yeah. Yeah, I thought I'd rip your head off by now.
Well, let's see. We've done some chest butting. We've done some head butting. I think no. What other things have we done on our
Product
show?
placement,
We've done some awesome predictions.
predictions.
Yeah, we've had some great predictions, as you know, and we've had a good time. And I hope that you, the watcher, viewer, whatever you want to call yourself, the buyer, seller, real estate agent,
have been
is having
educated.
fun as well. Educated.
Hopefully.
That is the word.
Hopefully,
Be entertained.
because that's what we try to do here.
Yeah, be entertained and educated. We've got some things that are going to educate you today too. We're going to talk about some bond stuff and
Excellent stuff.
yeah.
But if this is your first time being on Real Estate News You Can Use,
Then you're a loser.
welcome. Welcome.
No.
We're at 50 episodes and it's only getting better. This is a real estate and video vodcast and podcast that what we do here is basically talk about 3 articles that we have chosen to discuss and give our own commentary and feedback, and we provide the articles to you at www.realestatenewsyoucanuse. renewsyoucanuse.com. All right, Keith, what's going on? Let's go start the articles.
I'm so excited.
I've been playing around so much.
Well, there's an article here that talks about this ex-Countrywide executive heads to a new mortgage firm.
Right.
And I kind of added to that in order for him to be successful, he probably has to change his name and put on a disguise. This guy named Kirkland, I believe his name is. Yes, Kirkland.
Yep, Stanford Kirkland.
He was extremely successful at Countrywide, made Countrywide what it was, which was the biggest mortgage company
lender
out there.
Yeah.
And the bigger they are, the harder and faster they fall, and that's exactly what happened. But he moved out just in time, and
He
now
moved out in, like early 2006, I believe.
yeah, and he says, I have a reputation in that market. Unfortunately, it is tainted by things that transpired after I left. So I don't know how true that is. I think that he probably some of that taintedness.
He probably knew what was coming.
Of course he did. He saw the writing on the wall. You know, he's not a stupid guy, but he's basically playing both sides of the coin. He's following the money, which we had talked about that before. That these
Right.
mortgage brokers are following the money. So not only are these mortgage brokers following the money, where they used to be mortgage brokers, and now they're helping educate the people that are going into foreclosure
Right.
and how to avoid that. This is exactly what this guy is doing. He's got his own little mortgage company that's starting up, and he's taking these bad loans and trying to resolve
by
it.
the sounds of it, though, he's going to be starting something he calls Private National Mortgage Acceptance Company, LLC.
Yeah, Penny Mac.
Penny Mac is what he would like to call it, but it doesn't sound like it's going to be small, Keith.
It's definitely not going to be small. It's
Definitely. Let's just put it this way. He says, he declined to offer how much capital the firm intends to raise to buy distressed mortgages. But he estimated the total value of such loans to reach $1 trillion in the U.S. over the next couple of years. So obviously, for him to refer to that number,
Right. He knows something that we don't know, maybe, huh?
Maybe he plans to spend a lot of money or raise a lot of money.
I think we've talked about this before, but there's all these articles that say that the market's is going to be $1.5 trillion more loans going bad this year. I just don't believe it.
Yeah.
Not 1.5 trillion. Excuse me, 1.5.
Well,
million.
another big part of this article is pretty much them saying that, okay, he used to work for Countrywide. Now he's going to try to help help people out. What do you think about that?
I think it's a great idea, and I think that there's nothing wrong with trying to follow the money. This article suggests that there might be something wrong with that, but one person says he won't be the first or the last person trying to make money on both sides of a trade. That's exactly what he's doing. He made money as the market went up, and now he's making money as the market goes down.
Right.
Almost like option writing in the stock market.
That's right. Well, I'm going to read one more quote. On one hand, you could make the case that he was with the company that made these loans. On the other hand, what we need to know right now is what we need to do is find some buyers for the assets.
Right.
Is it fair? It's hard to say.
Time will tell. Time will tell.
Time will tell.
Hey, look at this one. The Sun Belt sees slowing in population growth.
The Sun Belt, that's what I want to be right now.
No kidding.
Actually, no, it's spring now.
Well, you can see that the sun feels nice and strong, but it's actually cold out. It's in the 30s today.
Yeah.
But in any case, we talked about this as well, Ruben, where I was kind of surprised where the economy, where there are less houses where people live in a home, the economy actually thrives better in those areas than not. And now we're showing where the economy is having problems because people can't sell their house and move where the economy is strong or where the population is growing.
Right, exactly. I mean, if you don't know where the Sun Belt is, it's pretty much all the southern and western states. I mean, the biggest or most popular.
I slapped my boy across the face. I call that a Sun Belt.
The most popular counties in the quote-unquote Sun Belt.
I didn't do that, by the way.
We're in California. 10 of the most largest population increases in the Sun Belt: California, Nevada, Arizona, North Carolina. 10 counties within those.
And all those counties have had slower growth than previous years. So, it's so important. Real estate is so vital to the American growth that's why that's the number one reason why the economy is struggling. I mean, we're seeing a rise in oil cost, but that's in my opinion that's a short-term change. Real estate is such a long-term change because it's such a big part of the economy.
It's huge.
Yeah, giddy up.
For more information, go to renewsyoucanuse.com.
That's right, Ruben.
Keith, this is stuff that you love. So why don't you take?
All right, it's all about Ruben. It's all about liquidity. How much time do we have left? Oh, we got a couple minutes. Okay, so I'm going to keep it short but sweet.
Nap?
We have talked about the economy. Time to take a nap. Maybe I get to. Oh, that's the other thing I did in one of the episodes that I strangled you.
All right.
And again, go to episode 32. You'll see that we're spot on about the market changes. Excuse me. Let's talk about the interest rate market real briefly here.
Yep.
We saw that the interest rates in the short term have been coming down, but in the long term they've actually gone up because of a spark of inflation and a spark of basically a supply and demand. There's such a huge supply of bonds out there in the market that the demand is not as large. In addition to that, the demand is not as significant because people are afraid, Ruben, to actually buy these bonds, whether they're investors from overseas or here, because they feel that the liquidity might be a liquidity problem and they might not get their money back when they invested in the bond. Now, that being said, what's going on recently is that Fannie Mae and Freddie Mac have been basically told to buy some bonds back.
$200 billion.
Yeah, that's more than some, huh? To get rid of all these bonds that are in the market and force a more liquid market and more attractive market so that there's more of a demand for these bonds.
That's right.
Okay? So now that we have all this good stuff going on, we're going to see, I think, a leveling off of the bonds, so that the bonds are better bonds. The better bonds in the market means that the quality is better, which means that the interest rate charge or the yield that you're going to try to get from that bond is not going to be as high.
Right.
And the lower the bond, the better your 38-year mortgage. And we've seen that come down a little bit over the last few days. In the market, so we're a little bit. It depends on what you're looking at in the day, but we're a little bit under 6 right now, which is great. Hasn't happened in a little while there.
Good stuff all around. Good stuff all around.
Need coffee after that one.
If you want to check out the full article for yourself, if you didn't like Keith's explanation, which was a good one,
thank you.
Go to renewsyoucanuse.com.
Anything you want to say? News, you can just keep on going back to our website because we're always doing something strange to our website.
A lot of changes have happened to the website.
Episode 50. We should have like something fancy.
Change it up.
Yeah, we're gonna have to call our person to change it up for just episode 50 and make it look pretty cool. Maybe we should give something away. You know, we get a new newsletter coming out too. If you want to sign up for our newsletter, go to RE News. You can use and find the button that says sign us up now.
We gotta go.
Bye bye.
Ruben, Keith.
Stay classy, America.
Make it a great day.